One of many reasons property investors buy new properties has nothing to do with the property itself. It has to do with tax. Because in Australia, investment properties can come with something called depreciation. And depreciation can sometimes reduce an investor's taxable income by thousands of dollars every year. But most people don't fully understand how this works. And they often overlook comparing different investment properties, which means they miss a benefit that could significantly improve the numbers of an investment. When you buy an investment property, the building and many of the internal items gradually wear out over time. Things like appliances, carpet, air conditioning, and even parts of the building structure. The Australian tax system allows investors to claim the decline in the value of those items. This is called depreciation. Depreciation doesn't mean the investor is spending money every year. Instead, it recognizes that parts of the property lose value over time. Because of this, the tax system allows investors to claim deductions for that decline in value. These deductions can reduce the investor's taxable income, which can reduce the amount of tax they pay. Depreciation benefits are often higher on newer properties. That's because the building and the fixtures are brand new, which means there is more value that can be depreciated over time. This is one reason some investors consider newly built properties not just for the property itself, but for the tax efficiency. Reducing taxable income can improve the cash flow of an investment, and improving cash flow can make it easier for investors to hold property over time, which is important because property investing often relies on long-term growth. This is why experienced investors often analyze property investments very carefully. They look at the purchase price, rental income, potential growth, and tax deductions like depreciation. Because when all those factors work together, the investment can become much more powerful. In the next video, we're going to look at something even more important when choosing investment property, and that's where to buy. Because location plays a huge role in determining whether a property grows in value. If you're interested in learning more about property investing and rentvesting, consider subscribing to this channel, because in next week's video, we'll look at the key factors that drive property growth. If you are very interested in getting into property investing, I have released a free set of calculators that can help you determine how long it's going to take for you to save the deposit that you need to start on your first one. And secondly, what sort of gains can you expect by rentvesting instead of buying a house or just simply renting and not actually having an investment property as well. So those two free calculators are available in the description. And I also have a very comprehensive set of calculators that can help you understand every single step of the process if you're interested in really understanding where you're up to in this investment journey. Thanks for watching, and I'll catch you in the next one.